Q2 FY26 earnings conference call for Genus Power Infrastructure Limited, hosted by Kaviraj Securities. As a reminder, all participants' line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, you may signal an operator by pressing star then 0 on your touchtone phone. I now hand the conference over to Mr. Abhijit Purohit from Kaviraj Securities. Thank you, and over to you, sir.
Good evening, ladies and gentlemen. Kaviraj Securities extends its festive greetings and welcomes you all to the Q2 and H1 FY26 earnings conference call of Genus Power Infrastructure Limited. Today, on the call we have with us Mr. Kailash Agarwal, Vice Chairman, and Mr. Jitendra Agarwal, Joint Managing Director. I now hand over the call to Kailash sir for his opening remarks. Post that, we can open the floor for Q&A session. Thank you, and over to you, sir.
Thank you, Abhijit. Good evening, ladies and gentlemen. A very warm welcome to Q2 FY26 earnings call of Genus Power. The results, investors' presentation, and press release are uploaded on the stock exchanges and company website. I hope everybody had a chance to look at it. I am pleased to share that Q2 FY26 was another strong quarter for Genus Power. We continued to build on the momentum of the past few quarters, driven by steady execution, disciplined operations, and continued progress across our smart metering programs. In Q2 FY26, our standalone revenue stood at 1149 crores, a sharp 136% increase over rupees 487 crores in Q2 FY25. This sharp increase was supported by healthy progress across our large AMISP projects, particularly as more of them are now transitioning into the operational phases. EBITDA more than tripled year-on-year to rupees 244 crores, with margins improving 456 basis points to 21.3, aided by operating leverage, cost control, and overall execution efficiency. Profit after tax from continuing operations grew by 162% to rupees 148 crores, translating into a PAT margin of 12.9%, reflected improved operating performance and better absorption of fixed costs despite higher finance expenses. For the first half of FY26, revenue stood at rupees 2,091 crores, up 132 year-on-year, while EBITDA grew over a threefold to rupees 444 crore, with margins improving to 21.2%. PAT rose to rupees 277 crores, an increase of 185% compared to the same period last year. This consistent performance across quarters reflects our continued focus on execution excellence and financial discipline even as we scale up rapidly. The total meter requirement envisaged under RDSS scheme is approximately 25 crore meters, out of which 15 crore smart meters have already been awarded by different state utilities, and remaining 10 crore smart meters are broadly pending from states like Gujarat, Kerala, Madhya Pradesh, Punjab, Tamil Nadu, West Bengal, Haryana, Delhi, putting a total number of 10 crores. So out of 25 crore meters, 15 crores have already been awarded, and 10 crores has to be awarded. And out of these 10 crore meters, approximate 10 crore meters, 3 tenders are live. One from Tamil Nadu, that is of 3.05 crore meters, one from Delhi BSES, around 50 lakh meters, and one from Punjab, 26 lakh meters. Remaining approximately 6.5 crore meters are expected, the tenders are expected to come in next 12 to 18 months. So next 12 to 18 months, we are expecting another 10 crore meters which are live or tenders will be coming to be finalized. And company is very hopeful in maintaining its run rate. Company has a run rate in earlier tenders out of that 15 crores also. So the same run rate we hope that we will maintain. Even after these 10 crore meters, few large states like Karnataka, Telangana have yet not taken the drive under RDSS. So these states are out of these 25 crore meters. So if we add these states also, which we are very hopeful that these states also will be coming under the RDSS or they will take the drive of RDSS in next 1-2 years. So if we add that number also, the number of meters required will come to 30 crores, 31 crores. So put together, if we can say that out of total requirement of 30 crore meters, 31 crore meters, 15 crore meters has only finalized yet. So almost 50% meters, that is 15 crore meters, are yet to be finalized, and those tenders or live tenders will be finalized in, say, next 1 to 2 years. Out of 15 crore meters which has already been awarded, 4.5 crore smart meters have been installed in the country till today. Out of 15 crores which has been awarded. So this is the picture I just want to give you on the market size, or the meters already has been awarded, and now the remaining meters that has to be awarded in next 1 or 2 years. Now I come to the cash flows and working capital of the company. We are in a AMISP business where initial 3 years are the phase of installation and completion of projects. Thus, a lot of inventory is required at different sites of different projects. So every company is working on almost 15 projects, 20 projects. Out of those 20 projects, every project has a different sites, many sites. So every site we have to keep an inventory, we have to keep finished meters, and so a large inventory is required at different sites. Once these projects are streamlined and start operating in full swing, the inventory will also start reducing. The debtors days have already started coming down and have reduced from 187 days as on 31st March 2025 to 126 days on 30th September 2025. So there is a reduction of almost 61 days in debtors days. But the inventories remain same because again new projects are being started, new areas are being started. But we are hopeful that in coming time inventory days will also come to a reduction. We are very hopeful that every 6 months you will see a reduction of 40 to 50 days in working capital cycle. Say in 26 by March 26 another reduction of 40-50 days. Then next 6 months to 12 months another reduction of 40 to 50 days. So by end of 27 we are very hopeful that our working capital cycle from here also will go up to a 160-170 days, which we have earlier told to the investors. As on 30th September 2025, company had a total gross debt of 1744 crores, which is about 400 crores more than the gross debt that was on 31st March 2025. The increase in gross debt is primarily from short-term loans, and this will start reducing from middle of FY28 onwards. The expected peak borrowing by the company will go to maximum of INR 2,000 crores to 2,100 crores. So basically, we are saying that whenever we will reach to a revenue, expanded revenue in 27, 28, but the debt will not go above 2,000 or 2,100 crores. As on 30th September 25, company had a cash and cash equivalent of approximately INR 600 crores. So when we say 600 crores cash and cash equivalents in the form of fixed deposits, the gross debt is 1744 and the net debt actually is 1100 crores, 1150 crores. As on 30th September 25, the company had invested approximately 318 crores in the joint venture platform and SPV of joint venture platform with GIC. Company expects investment of another INR 700 to 800 crores in the joint venture platform in next 3 years. That is over financial year 26, 27 and 28. So put together, the company's investment in the platform where we are a 26% partner will go to a level of 1,000 crores, 1,100 crores, not more than that. The company estimates revenue of INR 4,500 crores for financial year 26 and INR 5,500 to 6,000 crores for financial year 27 with an EBITDA margin of 20%. So the company is revising its guidance for FY26. Earlier we have given a guidance of 4,000 crores and 18% EBITDA. Now we are giving a guidance of 4,500 crores for FY26 with an EBITDA of 20%. And for FY27, around 5,500 to 6,000 crores with an EBITDA of 20%. In H1 FY26, company manufactured around 90 lakh meters. So last 6 months, company has manufactured around 90 lakh meters, out of which 50% meters have been supplied to government utilities and private utilities, which are buying non-smart meters also, and to the other AMISPs also. Balance about 50% of the meters have been supplied to the joint venture platform with GIC. As on 30th September 2025, the company had a total order book of INR 28,758 crores net of taxes for about 3.6 crore meters for supply to utilities, other AMISPs, and to the joint venture platform. In H1 FY26, the company had also received orders from different utilities of INR 127 crores for approximately 9 lakh meters, which are non-smart meters. So these are the regular meters which we were doing earlier, we were supplying earlier. These are the regular meters which utility buys on urgent basis and are for meter supply only. And then these are non-smart meters. These are the regular meters. Out of 24 MISP projects which we are implementing, 13 projects totaling to 2.10 crore meters have received operational go-live certificates from utilities. Remaining 11 projects are expected to achieve operational go-live status in the December 2025, January 2026 time frame. Further, company is also setting up a new injection molding plant in Kotputli, Rajasthan. In first phase, we are willing to install 40 machines, which are expected to be operational by end of financial year 26. This unit will supplement our capacity to supply plastic molding components for meters manufactured by us. So basically, this I have tried to give you a data on the company, the market size, the debt of the company, the investment of the company in the platform, and the order book. Now I open the floor for the question answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Divyansh Thakur from Finterest Capital. Please go ahead.
Sir, congratulations on the great results. I'd like to ask that how many meters have been installed in Q2 of this fiscal year?
Hello, can you hear me?
Hello, sir.
Yes, sir. Yes, sir, please go ahead.
How many meters have been installed in Q2?
Yes, sir.
So Q2 we have installed around 19 lakh meters.
And sir, how are we planning to reach the target of 80 to 90 lakh meters that we had given the guidance of?
So in the first half yearly, we have installed around 36 lakh meters, and we are confident of the guidance what we gave earlier, around 80 plus lakh meters we will install, because November to March is the best period for the installation of meters historically also. So we are more than confident of achieving the target what we have set earlier for ourselves.
Thank you, sir.
Thank you very much. Next question is from Bhavin Chheda from Enam Holdings. Please go ahead.
Congratulations, sir. Overall, a very good performance on the operational and also the revising the guidance. Sir, how many meters around OGL have operational gone live?
So, as on date, out of 3.62 crore meters, we have installed it total 80 lakh meters. Out of 80 lakh meters, 42 lakh meters SAT has been done, and out of this 42 lakh meters, 40 lakh meters have achieved the operation go live.
So, sorry, sir, till date you said till date we have installed 80 lakh meters?
Till date we have installed 80 lakh meters, out of which 42 lakh meters have been, SAT has been done. The reason I am giving the detailed answer is so that other participants don't need to ask the same thing again. So 80 lakhs has been installed. Out of that 80 lakhs, 42 lakhs site acceptance test SAT has been done, and out of that 42 lakhs, 40 lakhs have achieved the operation go live.
So we have started receiving monthly revenue on 40 lakh meters, right?
So this 40 lakh meters, we have started receiving the monthly revenue. This monthly revenue starts after the 45 days of achieving of OGL.
Okay. Okay. And you mentioned the manufacturing of 90 lakhs in H1. How much was in the quarter? This quarter?
The quarter of exact number, I don't have it offhand with me, but around 50 lakh meters you can take.
Around 50 lakh meters. So basically, if I see on a per day basis, you have achieved almost 50,000, right?
Hello?
Yeah. Hello?
Yes.
Yeah. So on a I was just looking on a per day basis, basically on a
It is
per
almost
day
50,000 meters per day, 50
Yeah.
lakh meters per month.
50,000 meters
Yeah,
per
so-
day.
Yeah. So how is the ramp up on a per day basis now planned going ahead?
So currently we are very comfortable in the current capacity, and whatever the requirement we have ahead of us, current capacities are capable of handling it. And if we need to ramp up, we can add some more shifts. So it's very well taken care in the current market scenario.
Right. On the sir volume front, I think previous guidance was 75 lakh for FY26. Now you're saying 80 lakhs. Obviously, on a revenue number also, absolute revenue number also, you are up the guidance. So next year we are looking at over 1 crore based on the revenue number what you have guided. Installation.
Yes.
Okay. Thank you, sir. Yeah.
Thank you.
Thank you very much. Anyone who wishes to ask a question may press star and 1. Next question is from Ishwar from iThought PMS. Please go ahead.
Hi, sir. Thank you for taking my question. So, question I had was, what degree of indigenization do we have in our smart meters? Why I'm asking this question is, for context, our competitor HPL Electric, they have partnered with a Chinese company to develop relay manufacturing in India. And another player called Permanent Magnets, they have also invested in latching relay capacity through a licensing agreement. And they are also beginning production the second half of this year. So what is our capability in that side, and how much percentage of our smart meter is indigenized?
So just to give you a understanding on this, smart meters is already in the category 1 of manufacturing in India. So more than 60% of the value addition has to happen in India. Smart meters are already in this category. And Genus very comfortably is part of this category, being the largest meter manufacturer in the country. A lot of people are doing different kind of partnerships. I don't want to comment upon them. But yes, we are comfortably category 1, and whatever the requirement of Make in India or Made in India comes in future, Genus is very well placed in taking care of that.
Understood, sir. And this latching relay capacity, do we also have it in-house? And do we plan to supply it outside to other players as well? Because smaller meter manufacturers, they primarily procure parts from China. So do we have plans to...
We are not, as Genus, we are not manufacturing latching relays. We are buying it from our suppliers. So, and we don't intend to manufacture latching relays in the future also.
Okay, are we buying it from China, sir?
It is being imported from China also. It is being made in India also. There are multiple manufacturers based in India who are also supplying us latching relays.
Understood, sir. Thank you. That's all the questions I have. Thank you.
Thank you.
Thank you very much. Next question is from Darshal Jhaveri from Crown Capital. Please go ahead.
Hello. Good evening, sir. Thank you so much for taking my question, sir. Sorry, sir, I joined a bit late. I couldn't get the revenue guidance and the margin guidance that we've given. Could you reiterate, please, sir?
So revenue guidance for FY26 is 4,500 crores, and for FY27 is 5,500 to 6,000 crores with an EBITDA margin of 20%.
So, the EBITDA margin for both the years, right, is 20%, right?
Yeah.
Oh, okay. That's great to hear, sir. And I just wanted to know, like, as you said, a lot of tendering from Tamil Nadu and all these states have started to come up. So, what kind of an order flow are we targeting right now, sir? Like, in terms of value, how much can we, expect in this year or next year, sir?
So we have always.
Brother, I have given this all things in my opening speech. So let us take it your question afterwards, because there might be many other questions coming on the same thing, and clear numbers have already been given in my opening speech.
Sorry, apologies for that. I'll come back in the queue.
Thank you. Next question is from Mahesh Patil from ICICI Securities. Please go ahead.
Yeah. Hi, sir. So my first question is on the open tenders that you highlighted, the Tamil Nadu, Delhi, and the other one, totaling around 4 crore smart meters, right? So would like to know the status of this, especially the Tamil Nadu one, and have we bid for all the projects with Tamil Nadu?
Just to give you a heads up on this, there are 6 projects in Tamil Nadu, 2 in Delhi, and 5 in Punjab, totaling around 4 crore meters. Genus has quoted all 13 projects, and the status of Tamil Nadu is it is under technical evaluation. The status of Delhi is it is under technical evaluation. Punjab 26 lakh meters has been quoted today.
Okay, sir. And sir, my second question is on the guidance that you have given on the EBITDA margin. So in H1 we have achieved more than 21%. We are guided for 20%. And historically, over the last year, so we see Q4 has been the best quarter in terms of margins. So in FY26, we'll be definitely crossing 21-22%, right?
So basically, guidance is this. We want to be a little conservative on the guidance. Let's see.
Okay. And sir, if you can just elaborate on what is leading to this, better margins. You highlighted some cost measures, etc. If you can elaborate that.
Can you, come again with your question? Your voice was not clear.
Sir, on the margins, you mentioned that you have taken some measures for improving the margins, like some cost improvements, cost efficiency
These
improvements.
are basically operational efficiencies that is coming. It's mainly because of the operational efficiencies, and mainly it goes to that.
And so what is the difference in terms of margins for the meters that we supply to third parties, and does it vary?
That number we don't share.
Okay,
that's
sir.
a confidential. Yeah.
Okay, sir. Understood. Thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. Next question is from Mahek from Agility Advisors. Please go ahead.
Yeah. Hi, sir. I'm audible.
Yes, sir. Please go ahead.
Yeah. So thank you so much for the opportunity. Congratulations for a good set of numbers. So just wanted to know your thoughts on the export market as well as the smart meters for the gas and water. So what are your views and how are we approaching that area as well?
So we have been talking about it earlier also. So I'll go one by one. On the export market, Genus is working strategically in some markets. They take their own time. So if you'll see, historically also Genus reached a good 3-figure turnover in terms of exports, but then because of COVID it slowed down. So again we have started working on some strategic markets, and you will see very meaningful numbers coming from the export business in next 2 to 3 years. Currently it is pretty small, but you will see them growing year on year because perfect work is happening in some of the markets. When it comes to gas meters in India, there is a requirement of around 12 to 14 crore gas meters as per the latest reports, which will be required to be installed in next 5 to 6 years. So Genus is definitely going to play an important role in that market. And we also envisage in future gas meter also takes a route of RDSS, because at the end of the day, they have to become prepayment for a right metering, and taking a gas meter reading entering into a house is not easy. So government is already talking about and thinking of the prepayment gas meter. So we see that as a good opportunity. But yes, on the ground currently, it is an opportunity where 12 crore meters has to be installed in next 5 years. Whether they will be prepaid or whether they will go to the RDSS route or they will be simple, typical electricity meter kind of a business, that only the time will tell. There's no clarity on it today. When it comes to water meter, we see water meters as a very, very large opportunity, as big as or even bigger than the electricity meters, where it has started coming up. Currently, we have done some very small projects with some municipal corporations. Things have started rolling out in the country, and even in the international market, water meters are going to be a big opportunity. 4 years to 6 years down the line, we see water meter business to be as large or even larger than electricity meter business. So this is what our understanding and thinking about the water meter in the gas meter market.
Okay, understood. So basically, we are targeting those areas, but it will be 1 to 2 years down the line. Is that understanding correct?
I could not hear you properly. I'm sorry.
What I am trying to say is, these are our area of focus, but it will take some time to fructify into the...
Mr. Mahek, your voice is not clear. Can you please be more loud?
Hello.
Yeah, I understood you are saying, yes, it will take some time for gas meter, water meter, and export meter business to be of a meaningful revenue. 2 to 3 years down the line, you will see a very meaningful revenue coming from these sectors. I hope I have answered your question.
Yeah, understood. And sir, one more question was on the tender side. So we have participated for 3.5 crore meter tenders, and it has been in technical evaluation, I think, from the last 2 quarters is what I remember. So when can we expect the order to be finalized, and when can we receive some positive news from them?
It's very, very, very difficult to say. Well, these are large tenders. Electricity boards take their own time to evaluate. So right now, technical evaluation is going on. It may take 30 days, it may take 90 days. Very difficult to put any number onto it.
But JK, hopefully we can say that in this financial year, these will be finalized.
Yeah, this financial year, I'm pretty sure this will get decided.
Yeah, yeah.
Understood. Okay. And sir, one last question was one of our competitor, Kimball Technology. So what are your views? How are they doing, and how are they going so fast? As any views or any comments on that side as well, if you could please help?
I don't want to comment on any company. Everybody is doing their own work. Every company is doing a good job. This is what I can say.
Okay, not an issue. Thank you so much.
Thank you very much. Next question is from Pranjal Mukhija from Growth Sphere Ventures Limited. Please go ahead.
Hello, sir, I'm audible?
Yes, sir. Please go ahead.
Yeah, so congratulations on a great set of numbers. So I have a couple of questions. The first question is on this target that you've given for 80 lakh meter installation target. So may I ask from which states are we expecting the execution to happen for this target?
All 24 projects are up and running. So these 80 lakhs will be achieved. Every project is up and running right now.
No, but the majority of the volumes...
So it is according to the order book. If the Rajasthan has the large orders, the more numbers will come from Rajasthan. So it is according to the order book.
Right. So do we have a meaningful stake in the state of Maharashtra?
What do you mean by meaningful?
I mean, like...
No, we don't have very big number in Maharashtra in comparison to the total number of meters awarded.
Yeah, out of
we have a good number, but the percentage is not very high.
Sure. So, sir, are you, because you're present in the state, are you again seeing some sort of slowdown on the execution front in the state because of municipal elections?
Which state?
Maharashtra.
So these are ongoing project issues, so there's nothing very specific. Yes, currently there is a little bit of slowdown, and then it picks up again. So this keeps on coming and going. So I won't say it is such a problem which is not, I don't know how to put a right word onto it. So these are natural field issues. I don't see them as a major problem.
Sir, any development on the customer outreach that we're trying to do as an AMISP along with the utility and with the governments, just to sort of provide a better messaging for smart meters in the market? Any update on that?
So it is a regular process. All the RDSS projects, there has to be a consumer outreach to be done jointly by the utility and the AMISP. And all of us, all the AMISPs which are working on the field in their respective projects are doing this outreach. And you will see consumer resistance in most of the states has neutralized. Most of the people are welcoming smart meters. If you see the numbers in last 3-4 months, the installation rate has increased almost everywhere across the country. So that is consumer outreach is one of the major reasons where people have started understanding the value of smart meters. Not only consumers are accepting smart meters very welcomingly, they are also doing a lot of app downloads, and they have been becoming more and more demanding from the AMISP and from the utilities, which is even good. That means people are understanding the value of smart meters.
So, sir, could you please specify the medium of this outreach? I mean, are we doing this through pamphlets, advertisements? How are we trying to sort of educate the customer?
It depends on the utility to utility. Some utilities are focusing on the BTL. Some utilities want some outreach through media. So it depends on the utility what mode they want more from the AMISP to be focused with. So there's not a specific one way of doing it. Every utility has its own way. Even some wants Nukkad Nataks to be done. So every utility has its own way of reaching the consumers.
Sure. And so finally, I just wanted to understand if there is any development of the software piece. Are we looking into some new products that we want to develop, or generally how is this business doing?
So currently we are focusing on our own HES and FDM. That is a fairly large opportunity with us, and definitely the purpose of building with this software cell in future, this has to get monetized into further more services to the customer and the consumer.
All right, sir. Thank you. Thank you for giving me this opportunity, and all the best for future results, sir.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and 1. Next question is from Darsh Solanki from Axis Securities. Please go ahead.
Yeah, sir. Thank you for the opportunity. So my first question is, currently the...
Your voice is not clear, Mr. Daksh. Your voice is not clear.
Yes, sir. Is it better now?
Yeah.
So my question is, as sir mentioned in his opening remarks, that 31 crore is the market size that we are looking at, that the RDSS scheme may go up to 31 crore, and out of which 15 crores have been awarded till date. So I just wanted to understand the balance, the 16 crore for which the tendering, some of which tendering has already happened. So what is the market share that we are looking in this order? What would our share in this balance orders?
So in the opening remark itself, I have mentioned that we feel that we will maintain our run rate.
And can you what is the ballpark, what is the current percentage in terms of the market share?
So you have to understand it simply that currently we have been maintaining around 25% market share, and we definitely will try to maintain the same market share or even do better. But putting any number for the tendering business is very difficult.
Understood, sir. Thank you.
As business policy, we participate in each and every tender, as I just clarified earlier also.
Got it, sir. Got it. And sir, my next question is a bit of a long-term question. So, once like this 30 crore order is, I think you had mentioned last call that they are expected by 2032. So, and as you mentioned in the previous question that you are expecting a huge the growth from the export and meter segments in 2-3 years down the line. So would it be right to say that once the smart meters RDSS scheme has reached its target and it has moved to the O&M phase, the revenue of the business would be driven morely by export and water business?
Yeah, well, next 5-6 years I see no problem with the electricity meter business, and definitely 5-6 years down the line it won't have the same numbers. Once these 32 crore meters have been installed, then definitely there will be a lot of replacement meters coming, a lot of new service connections coming, but not as large as replacement of meters. So there will be a good revenue source from the electricity meters, and yes, and a lot of revenue source will come from exports, water meters and gas meters.
Understood. Okay.
So here it has to be understood that 5 years there is a clear path. We can see a clear path for 5 years with these RDSS electricity meters. And say in 2000, after 5 years, 6 years, this is over. This RDSS replacement of all meters into smart meters is over. Then there is a life of every meter. So these meters, the initial meters which has been installed in say 23, 24, their life, normally we say the life of a meter is 10 years, 12 years. So a lot of replacement business of those meters will be coming, number one. Number two, the new connections. Every year there are increase in connections that is happening. A business of that will be coming. 30 crores meters which will be installed, already will be installed. There will be a O&M monthly business of that. So a O&M, all meters have to be maintained monthly basis, which we are doing right now. So there is a full-time business of that also. 30 crore meters has to be managed from that time. And then the export market, then the water meter market, and then the gas meters. So put together, this will be the revenue coming after, say, 31, 32. And then if company goes in any other thing, it's a lot of time, 5 years, 6 years, company can see many other products coming.
Understood. For that and for future.
Thank you. Next question is from Sanatu Chatterjee from Mount Infra Finance. Please go ahead.
Thank you, sir, and congratulations for great.
The line for Mr. Chatterjee has been disconnected. We will proceed with the next participant. The next question is from Keval Barot from Axis Securities. Please go ahead.
Thank you for the opportunity. Actually, all the answers were asked by my colleagues, so there might be no question from my side. So I have got the clear answers from the questions. So yeah, that's it from my side.
Hello.
Yeah, hello. Hello, am I audible?
Okay, thank
hello?
you. Thank you.
Yeah.
So we can take next question, please.
Sir, the next question is from Keval Barot.
Yeah, hello.
Please go ahead.
Am I audible?
Yeah.
Yeah, so actually all the questions that I needed to ask has been already questioned by my colleagues, so I have no further questions to be asked.
Okay, thank you.
Thank you.
Thank you. We have next question from Akhilesh Gupta. Please go ahead. We have Pranjal Mukhija from Growth Sphere Ventures. Please go ahead. Mr. Pranjal, your line has been unmuted. Please go ahead with your question.
Yeah, am I audible?
Yes, sir. Please go ahead.
Yeah, sir, I don't have a question, but I have a small request, sir. I think we also asked this in one of the previous con calls. If possible, sir, could you please organize a plant visit to the Haridwar facility? I think that would be really insightful, and we'll be able to understand the new facility better.
So you connect to SGA, our investor relations. They will make it.
Okay, sir.
Thank you very much. Next question is from Santanu Chatterjee from Mount Infra Private Limited. Please go ahead.
Thank you for this opportunity and congratulations for great set of numbers. My question is on cash flow. As you have given prediction or guidance for FY26, that last one call you said that we can become cash flow positive within FY26. Are we still on this on the same page, or we want actually we are thinking that we can become cash flow positive in FY27?
So basically, cash flow positive may take some more time, what we were saying in FY26, because the projects have started and lot of inventory is needed in that. All 24 projects have different sites. Hundreds of sites are open, and every site needs some inventory on that. So inventory number is increasing and the debtors numbers is going down. So put together, as I told in my opening remarks also, that every last 6 months the working capital cycle has come down by 50 days. Another 6 months it will be coming down. So it may take some more time for cash flows to become positive, but we are very hopeful that in financial year 27 for sure we will be cash flow positive company. Because one thing we have to understand that AMIC business initially for the first 3 years need a lot of investment, because all meter installation, meter manufacturing, our software, everything has to be happening first 3 years. And because of inventory, this is going up, but we are hopeful of becoming cash flow positive by next year.
Correct. And another one, just want to clarify about your business cycle, that after achieving OGL status, is there any escrow account from where we are getting money, or we are getting directly from the State Electricity Board itself?
So there is a account which is called DDF. There is a separate account being opened, DDF account, and the money flows from the DDF account.
Okay. Thanks a lot, Mr. Sir.
Thank you. Anybody who wishes to ask a question may press star and 1 on their touchtone telephone. Next question is from Chandresh Malpani from Nivshape. Please go ahead.
Hello.
Yes.
Hello.
Yeah, we can hear you.
Yes.
Yeah. Thank you for the opportunity, sir, and congratulations. Sir, my question is on the investment that you mentioned about the JV platform. So I think you mentioned about 1,100 or 1,200 odd crores. But in our earlier calls, the investment was, I think the investment was about 1,600 to 1,700 odd crores. So is there any change over our?
So we committed. We have a commitment for the joint venture of $210 million. But now, seeing the requirement, we can envisage that it won't go up to 1,600 crores. It will not go more than 1,100 crores. So basically, 1,600 crores was the maximum committed to joint venture from Genus Power. But due to good cash flows coming to the joint venture and execution cycle, we feel that the maximum investment will go up to 1,100 crores. It won't go up to 1,600 crores.
And that doesn't have anything to do with the stake and obviously the exclusivity contract?
No, absolutely. That has nothing to do with the stake, nothing to do with the exclusivity. The requirement, so we have to invest as per the requirement only. So requirement, we initially projected that there will be a requirement of around 1,600 crores, 1,700 crores from Genus Power for the same business. But now it has come down to 1,100 crores. That for the same business, we won't go more than 1,100 crores. That won't be required.
Okay, sir. Thank you.
Thank you very much. Ladies and gentlemen, we will take that as our last question for the day. I would like to hand over the call to Kailash Agarwal for closing comments.
Thank you everyone for taking time to join us today and for your continued interest in Genus Power. We can assure you that company is doing extremely good and it will be doing great in coming times also. Next 5 years, there is a clear-cut visibility to the company that where the revenue will be going and how the margins will be coming. And the company is going to do excellent. There is no doubt on that. Thank you very much.
Thank you, everybody. Thank you.
Thank you very much, sir. On behalf of Kaviraj Securities, that concludes this conference call. You may now disconnect your lines.